Concerning the structure of the fintech ecosystem, we have seen that the fintech ecosystem is composed of fintech firms, technology developers, financial customers, traditional financial institutions, as well as the government, with various roles within the ecosystem. We see that the fintech firms, incumbents and startups are composed of a varied group of ICT corporations, payment technology companies, wealth management, peer-to-peer lending, crowdfunding, capital market and insurance, for example. And these are mirrored by those actors, those companies who sometimes are involved themselves in these operations that are technology developers. We're talking about digital platform and APIs. We're talking about big data analytic, cloud computing, cryptocurrency, or even social media developers. On the demand side, as we saw, we're talking about both financial customers as well as organizations who, on the one hand, they deploy these technologies in their customer-facing activity, as well as they use them for their back office. And sometimes, most times, these companies are the owners of the property rights behind these technologies. So the sector is populated by financial companies which are born digitals, like online banks and digital financial service firms, platform-based alternative financial providers such as crowdfunding and peer-to-peer lending platform. They are populated by firms that are progressing to the digitization process, and in many cases this initiated before the fintech revolution, such as debit and credit card businesses and payment and transfers organization. And of course there are firms that have just initiated the digitization process, and somehow they are moving both in traditional banking and financial segments, but most importantly and massively into alternative financial services. These are organizations that are moving between commercial and investment banks, and of course there are laggards. Now, the distribution of fintech patents and utility models, or better, their value, are firmly in the hands of large payment, credit and debit card companies. These are large corporate entities, and also banks and other traditional banking and financial service companies, even if not directly involved in banking. These are security companies, for example. Now, this is very important because this concentration is key to future development of the sector. There is one note that perhaps is necessary to make at this point, is that this distribution has a very, very long tail. It means that many new fintech company and alternative financial provider do have value stored in their IP in terms of patents as well as utility model, and this value is something that they're going to rely on in the future for growth and development. So to move to a short-term outlook of fintech, let's say up to 2020, right? We can see that fintech operators are consolidating their market position and expanding it in complementary segments so that they may contribute to their basic consolidation. They are growing their customers base by doing so, by linking, for example, banking services together with lending and saving services. So to quote some example from our contributors, we can see that banks integrate new technologies in their product and service to retain customers and attract new cohorts. Alternative finance providers they have interesting, unique point of say that can exploit to their advantage on several critical fronts. internally by streamlining processes, and externally through marketing and sales. These are facing use characterized by a lack of awareness, which is cited by poor financial literacy in technology-based financial operation. So they do have a need to extend their reach by perhaps raising awareness and working with their customers. In fact, partnering with larger players and offering specialized technological solutions, even into ancillary services that are just peripheral to their core business. So technology alone cannot overcome these barriers, and strategic market approaches such as increasing and extending banking services do require further regulatory compliance. FinTech and the tech-based alternative finance provider are enacting, on the whole, a strategy of wait and see what happened in 2020 when European-wide legislation have been implemented. However, a larger alternative finance provider are actively moving by replication. They have a solid technological infrastructure and a working business model, so they do move into other countries by adapting to the local regulation and deploying their services that way. They are either or partnering with large local players, they seek these local players which have complementary characteristics so that they can provide additional services. And in European countries with low tech or low fintech capabilities, we can see a host of alternative finance providers who are just in their nascent phase. So as we can see, the dynamic and the prospective dynamic of the fintech sector is still moving, and is still moving towards expansion, and we will see some interesting development in the near future. Thank you very much.